What's up, Banter fam? I hope you are having a lovely day. My name's Miles, and I'm the host of the DeFi show. And in today's video, I'll be showing you how to build a successful crypto portfolio. I'll be sharing with you guys my tips on maintaining, balancing, and building a well-structured portfolio to set you up for long-term success in crypto. It's going to be a massive show. Let's get straight into the show. So yesterday I did a Twitter thread, which was basically my guide to achieving success in crypto. And I wanted to come on today and give you guys a more comprehensive scope of that Twitter thread, because the thing with threads is that I can't really convey the full message behind each tweet. So you guys are lucky right now, because I'm going to break down my exact methodology for each part of this Twitter thread and show you guys how you can build a successful portfolio. You may have saw on the thumbnail $1 million portfolio, because I believe that if you implement these steps into your own crypto journey, you can set yourself well on the way to building $1 million or more portfolio, as these are the fundamental steps that you should be taking if you want to build a successful portfolio over time. Remember, this video is not financial advice. This is for entertainment purposes only. Let's get straight into it. So crypto, I believe, is giving us a once-in-a-lifetime opportunity to achieve financial freedom. I mean, what other industry can you hit 10x's, 100x's? I mean, it's basically unheard of in the stock market. It's basically unheard of in the property market. And crypto is giving us that chance to unlock financial freedom. But sadly, 99% of investors will probably never get there. And it's the only 1%, in my opinion, that will make it, because there are many mistakes that investors make and many things that people get wrong. And I want to make sure you don't get those things wrong and that you guys can set yourself up for long-term success. So I'm going to show you how to make that 1%. Now, it is a hard 1% to make, and it's going to take some effort and it's going to take some learning. But if you can master the skills that the 1% have, then I think you guys can set yourself up for a long journey of success in crypto. So let's get into this thread. Let's get into some of the details that I think are super important to master to building a big portfolio in crypto. And I'll give you guys some of my secret sauce, some of my alpha in this video that I personally use to build and maintain my crypto portfolio. So this will cover portfolio theory, how to maximize your portfolio like a pro and manage it, and also how to maximize yield through DeFi, which obviously is the main centerpiece of this show. So firstly, let's clear up a common misconception. To make money in crypto, you don't need to get every call correct. In fact, you can make 10 bets and only hit one winner to still come out ahead. So I think there's a common misconception in crypto that we should strive to be perfect. And I don't believe this. I don't think we should strive for perfection. I think we should strive for profitability. And there's an interesting distinction that I like to make between the two, because you don't need to hit every single coin as a winner. You could take 9 losses and your 10th coin could be a winner and you can still come out ahead. And this is the philosophy that I approach when I am making crypto investments. So I'll give you an example. So for example, in May, a lot of people were aping into projects. If you guys were around during the May bull run, a lot of people were aping during these highs as coins were absolutely exploding. Now, most people that aped during May ended up getting wrecked, because in June, July, the prices had significantly dipped. And it wasn't until November until prices started to recover. However, if you had bought a coin like Luna in May, you'd still be up a 6x since then, and you would have been up an 8 or a 9x when Luna was at highs of 120. So if you had bought Luna, you'd still be up now, even if none of your other investments recovered. So let's say you bought 10 coins. Let's say you bought some of the top coins at the time. So AVAX, Aave, and Cake haven't performed so well since then, but they were very popular. Things like KuCoin, Kusama, Dot, they didn't perform too well. And if you bought in May, you'd probably still be down on those coins. But if you invested in 9 coins and your 10th project was Luna, you'd still be up on that overall portfolio to this day. So it shows that you can take losses before you can hit a winner and still come out ahead in this market. So I do want to say that you should be striving for profitability and not perfection in crypto. I look at traditional markets and other fields of interest in financial markets to kind of justify this thesis. So for example, in sports betting, if you hit a 55% win rate on your bets, you're considered a very, very good sports bettor. And that's considered an incredible return. In the stock market, if you're a funds manager and you average a 10% return per year, that's considered an amazing return for stocks. And you could call yourself a professional if you're averaging between 10 and 15% in stocks. So in crypto, why are we so hard on ourselves? Why are we always aiming for these crazy 100x's? And if we don't get there, why are we upset? because we're still significantly ahead of what other industries are. So don't aim for perfection, aim for profitability. And that is something that I really want to make a point of, because you can still come ahead if you make bets and spread your risk accordingly. This means taking losses in the pursuit of positive returns. So what can I do and what can you do to implement this strategy successfully? Well, the first step is diversifying. You don't want to be too spread out across too many projects, but at the same time, if you only own 4 or 5 projects, you're increasing your risk profile because you're relying on those projects over the overall market in order to succeed in your portfolio. So that's why I recommend to new investors to build a portfolio of 20 great projects. I recommend 20 projects is usually the sweet spot. In the bull run, I probably had 40 to 50 projects, honestly, but I've trimmed that down until we have direction. So this is an important distinction to make. In the bull run, you want to have more projects because you want to capture more segments of the market, because when the market's rising, you're giving yourself a better chance to achieve profitability. But in a bear market or a sideways market like we're in at the moment, you don't want to be spread too thin because 1, it's way too much to keep manage of, and 2, you're increasing your risk significantly because the likelihood is that there isn't 50 amazing projects out there. The likelihood that there's only a smaller percentage of projects actually out there on the market. So you don't want to be spreading yourself too thin. You want to be just having just enough projects to capture the overall momentum of the market, but still having enough conviction in the projects that you're invested in. So just to summarize, you want more projects in a bull run in your portfolio, and you want less projects in a bear market in your portfolio. And that is the rule that I go by when building a portfolio. So here's an example that Rand gave out on the show of an example portfolio that you guys can use. Now, just remember, this is just a general example, just to give you guys an idea of the type of thing you can build with 20 projects, but it will largely depend on what you want to invest in. So I like to have at least 50% in blue chips, 50% in this HODL section here, because I reckon if you have too many Degen projects constituting a large percentage of your portfolio, it's just increasing the risk profile a little too much. So I'd keep 50% of your holdings in this HODL bag. Now, this HODL bag is obviously your Bitcoins, your Ethereums are the main 2. If you want to be a little bit pushy, you could probably add your Lunas, potentially like a Solana, but I'd probably cap it at around 5 quality projects in this HODL bag here. The majority of your assets should sit here, and the majority should be your Bitcoin, your Ethereum, and your Solana. So I'm constantly presenting new ideas on my YouTube and Twitter, but we did a nice portfolio for you guys a few weeks ago, which dictates what it might look like if you want to get 20 projects involved. Now, here's the key to this. I wouldn't just go and copy this portfolio, honestly. And I wouldn't copy any portfolio an individual or an influencer gives me. Remember, the tokens you hold depend on the tokens that you personally have conviction in. So if the market tanks and you're invested in projects you don't really believe in, let's say you ape into BBS because it's in here, but you don't really understand how it works, or you don't really understand the industry, then it's going to be a lot harder to hold onto those tokens if the market crashes. If you invest in narratives that you personally have conviction in and that you believe in, if the market tanks, there is a much higher likelihood that you're going to be able to hold onto them and accumulate during times of downwards volatility. For example, Phantom is a project that I have strong conviction in. So when the market's dropping like it is at the moment, that's something I continue to accumulate because I have $7. But if you don't have conviction in something like an Arweave, why would you buy it? So just remember, guys, invest in the narratives that you think are important. Now, the good thing about this portfolio, and this is really the part that makes a portfolio like this special, in my opinion, is the fact it has exposure to multiple narratives. So you don't just want exposure to one segment of the market. In order to really become profitable in crypto, you want to hold exposure to multiple segments of this market. So this portfolio here, it has L1 exposure, it has L2 plays, it has privacy plays, it has cross-chain plays, and it has gaming plays. So if you have exposure to multiple segments of the market, let's say gaming decides to take off like it did in November, if 10, 15% of your portfolio was allocated towards gaming, then you're going to end up doing quite well because you had a percentage allocated to gaming. Let's say you missed the gaming narrative, but you had 15% in L2 plays and L2s explode. well, you still benefit from the upside of L2s. So that is why I would recommend having a diversification across multiple asset classes within crypto or multiple segments of the crypto market, which is why this portfolio is quite good. As we can see, you've got something like a Solana, an AVAX, which is the L1 power. You've got IMX, which is that L2, those gaming plays. You've got Joe, which is a DEX. You've got Rune, which is cross-chain. So you've got multiple exposure to multiple narratives here, which I think is quite valuable. So remember, invest in the narratives that you think is important, and that will set you up for much more long-term success in crypto. Remember, the more experience you have, the more likely it is that you'll be able to manage a larger portfolio. So if you're managing 40, 50 coins, that becomes quite a large time investment. So you've got to remember, only invest in enough projects that you have enough time to manage. It's no use biting off more than you can chew. If you're busy with a 9 to 5 and you're working all day and you've got to come home and see your family, kids, friends, etc., and you only have an hour a day to dedicate to crypto, why would you own 100 projects? That's just going to cause you a massive headache. So only invest what you can afford to manage. Remember, crypto is supposed to be fun. So if you're not having fun investing in 50 projects, invest in 10. Learn everything there is to know about those projects. Learn their price movement patterns. Become an expert in those 10 projects. Because I can guarantee you that becoming an expert in 10 projects is going to set you up for a lot more success than being an average jack of all trades in 50 projects. So remember, only bite off as much as you can chew. So what does managing a portfolio consist of? Because it's one thing buying a portfolio, right? There's one thing making purchases, but then the next step, and probably the most important step, is what you do after that point. So this is taking profits, finding the best yield opportunities to maximize staking on those coins, staking and compounding, rebalancing your portfolio based on performance, and then finding new projects and discarding holdings that aren't performing. So there's multiple aspects of becoming a great project manager that you have to master if you want to become successful and build $1 million crypto portfolio. So let's break down just a few of these key categories right now, and I'll give you some tips that I personally use that I think can help you guys become the ultimate portfolio managers. So just remember, taking profits is one of the most important things in crypto. It's something that we have to continue talking on time and time again, because taking profits is how you set yourself up for success. It gives you buying power, and it also enables you to realize gains, and it doesn't keep you holding bags that are inevitably going to drop. So how you take profits and your profit-taking strategy depends on 3 things. It depends on your time horizon, so how long you want to be in the market for. It depends on your risk tolerance, so how much risk you want to actually assume. And it depends on your financial goals. How much money do you want to make in crypto? Are you going to risk it for the biscuit to make millions of dollars? Or are you going to play it a bit safer and allocate a little bit towards crypto, a little bit towards shares, and kind of be a little more well-rounded in your approach? So these are the questions you have to ask yourself. There's no point investing in crypto and starting to make buys or making sells if you haven't asked yourself these tough questions. You have to, I'd almost get a piece of paper, guys. I would write down my answers to 3 of these. I'd write down, what is my time horizon? How many years do I want to be in this market? What is my risk tolerance? Can I afford to lose it all? Am I investing money that I can afford to lose? Or am I investing money that I'm potentially going to need in a year's time? And what are your financial goals? Write down some goals and reverse engineer those goals. So do you want to become a millionaire within the next 5 years? Write that down. If you put it in paper, you're a lot more likely and more able to be able to work towards those goals than you are if you don't write it down and you're kind of just going off a whim here. So I would answer these 3 questions, and now we can move on and we can go from there and start being actionable. Now that we've answered the tough questions, we can start putting some of these theories into practice right now. Here's the first thing I do in terms of taking profits. Whenever a project doubles, just take out your initial investment. Let the rest ride, guys. There's no use in writing something and risking it for the biscuit if you can take your initial investment out. The sooner you can take your initial investment out, the better. Let's look at something like SHIB, for example. So the SHIB price absolutely exploded. There are a lot of guys that were buying around 7 cents here. Once it hits 14 cents, take your initial investment out, because now you're writing profits. And you're still going to be able to get exposure to this massive pump. As we can see, you still would have made a 10x, but you're not writing, you're writing risk-free now, essentially, because you've taken your initial out and now you're just writing the rest. So that's something that you guys can start implementing to invest more risk-free. Yes, you would have made more money on a trade like SHIB if you hadn't taken out profits, but long-term, you're going to end out much further ahead if you do take profits. So now we are taking a little bit of profits. We have to work out what that actually means, because the words taking profits, I think in crypto, no one really explains it enough. No one tells you where you should be taking these profits. No one tells you how you should be allocating these profits. So I want to give you guys some actionable information here for how to take profits. Me personally, every time I take money out of crypto, I'm putting 50% into Bitcoin. I believe it's the only form of sound money on the planet. That's my honest belief. I have large conviction in Bitcoin long term. So that's where I put 50% of my holdings. I put the other 50% into UST on Anchor, because I want to have 50% of my profits earning some yield in some stablecoin farms. And that 50% is then available to buy dips. So I always like to keep at least 20% of my total crypto portfolio in stablecoins, because that means when it comes time to buying dips, I've got enough dry powder on the side to be able to deploy. And a lot of people say, well, what if you have 20% and then the market crashes and you deploy? Well, now you've deployed, so you don't have any more stables. And people say that defeats the purpose. My counter to that would be, you should be looking to reaccumulate and re-top up your stable position at the next best available opportunity. So it's okay if you're under 20% for a few weeks while you work on getting that back up to 20% through either income outside of crypto or skimming profits from other investments. But you always want to aim in the long run to spend more than 50% of your time in crypto with at least a 20% balance in stablecoins. That is my non-financial advice method to profit taking, because I think a lot of people kind of miss the memo here with profit taking. So I like to put 50% into UST and 50% into Bitcoin. Now, with the LPs, you've got another manner of taking profits. So sounds tricky, and I came up with this profit taking strategy. Now, this is for the yield farmers out there and where you want to put this yield. Obviously, yield farming is a great way of earning extra yield on your crypto, but you need to know where to put that yield, where to put that additional income in order to lock some in. Because if you're constantly compounding back into the base LP, that's great. You might compound and make a lot of Luna, for example, but if Luna drops, you're kind of putting yourself in a risky position, because all that yield you were making for months, you didn't realize any of those gains. So these is my 3 profit-taking strategies for LP farming and for yield farming and taking profits from yield farming. So basically, there's 3 scenarios. There's the bullish, the bearish, and the mixed scenario. Now, it's actually the reverse way around. I believe we should act bullish when the market is bearish. Be fearful when others are greedy, and greedy when others are fearful, as Warren Buffett said. So I am bullish when the market is bearish. So this is the strategy that I do when the market's tanking. When the market's super low, I like to recompound my rewards from my yield farming back into the base LP. So let's say I'm farming Phantom. I want to convert my rewards from the LP back into Phantom and compound when the market is bearish, because that's when I want to act bullish. Now, when the market is super bullish and overheated, like it was in November, like it was in May, let's say it's looking super frothy, we're looking like we're approaching a top, that's when you want to start getting more conservative, and that's when you want to start withdrawing a percentage of that APR back into stablecoins. So let's say you earn $100 a week off your Phantom LPs. You want to start taking half of that, 50%, into stablecoins when the market is super frothy, because that's when you want to be accumulating stables. You don't want to be accumulating stables when the market's bottoming. You want to be accumulating stables when the market is pumping. So basically, whatever your emotion's telling you, do the exact reverse. And as soon as that kind of clicked in my head that I needed to start doing the reverse of what the market's telling me, that's when I started to become really profitable as an investor, because you want to be bearish when others are bullish, and you want to be bullish when others are bearish. So that is my yield farming strategy. But where are you going to find the best yields? Well, CoinDix is giving you a great way to do this. So obviously, part of crypto is allocating your holdings, allocating the projects you hold in your portfolio to places where you can earn the highest yield. Now, how do I find the highest yield? Well, obviously, I look at Twitter. I look at other influencers. If you guys watch my content, you'll see I put out a lot of my personal strategies for yield farming. So that's one great way to source strategies. But also, you can come onto CoinDix and you can search a particular project. So let's say I want to stake AVAX. You can search AVAX. Let's say you don't want to LP it, you want to single stake it. You can sort it there, and then you can sort it by APY to find out the best yields across the ecosystem. And CoinDix will automatically sort and index these APRs so you can find the best yields right now. Right now, we have AVAX actually on Phantom, which is paying the highest at 8%. And you've also got liquid staking, which is paying decent yield as well. It is a little bit glitchy sometimes. So CoinDix won't show you everything. There's strategies that I sometimes present on the shows that CoinDix doesn't show, but I think it's still a great platform to find the best yields. If you want to see the full thread, this is on my Twitter. I'm actually almost at 100K followers, so if you're not following me, I highly recommend checking out my page. I've got 91.5. I'm trying to hit 100K this week. I don't know if we can do it, but I mean, if you guys really run up the numbers, maybe we have a shot at doing it. So there's a link in the description to my Twitter if you want to get involved and follow, because I do post these threads. And I think these threads are really a nice key for you guys to be able to learn a bit more in crypto. And also the Twitter is good because I can post a little more rapidly. Obviously, I do my shows every day here, but on Twitter, I can post things as soon as I think of them. So you're going to get access to my brain a little bit quicker than you would on the shows. The shows are great because I can elaborate, but Twitter's great because it's fast. So make sure you're following me over there if you want more information. And the other major thing I have to talk to you guys about is MEXC, because this giveaway we're doing ends tomorrow. This is the last chance you have to get involved and win $1,000 worth of Bitcoin. So we're giving $1,000 worth of Bitcoin to 5 users. So we're giving away $5,000 worth of Bitcoin to users that sign up for a MEXC account, link in the description, and deposit $100. So all you need to do is deposit. You don't need to trade necessarily if you don't want to. All you need to do is deposit $100, sign up for MEXC using the link in the description. And on tomorrow's show or the show on Thursday, I'll be picking 5 lucky winners to win $1,000 worth of Bitcoin. It's basically free money, guys. So if you want to get involved, make sure you get involved. Link in the description because why not? It's free money, right? So I hope you guys enjoyed this video. I'm going to continue giving you guys the daily alpha in these DeFi shows. Remember, I stream every single day at 6:30 p.m. EST to give you guys the best information in DeFi and across crypto in general. I hope you enjoyed the show. I will see you in the next one. Peace out.